Hello and welcome to Property Summit. As ever, I have with me a team of hugely experienced property experts with a combined portfolio worth a whopping £1.5 billion. Together we'll delve into the very latest developments in the property world to make sense of what it means to you. I'm Emma Birchley and I'm joined by Richard Bush, who turned a personal interest in crowdfunding and peer-to-peer lending into a professional passion, co-founding Crowdlords, which pools resources to enable more people to benefit from investing in property. Also with me, Tony Gimple, a man with a direct and no-nonsense approach when delivering advice to buy-to-let landlords, investors and developers, whether that's on tax, accountancy, finance or succession planning. Also joining us is John Howard. He knows a thing or two about the property business, having bought and sold close to 4,000 houses, apartments and developments over 4 decades in the industry. And we have Nicholas Warwork, an investor, developer and property mentor who makes the most of his expertise in his role as CEO of the world's largest international property forum, providing advice on how to make money through property. And last but not least, it's Paul Mahoney, best-selling author and serial entrepreneur. He's the founder of Nova Financial Group, providing property investment advice with a particular focus on the buy-to-let sector. Hello to you all.
Hi.
So, this time we're going to talk about finance, how you finance your deals. And Richard, I'm going to come to you first. So, do you need to have a broker when it comes to sorting out that finance deal?
You don't have to have a broker, but I think just like with mortgages, people generally think that to access finance, I need to go to a broker. Personally, we deal with brokers all the time. We get information sent to us every day by brokers, and the value they add is almost zero.
Every time?
Almost zero.
Yeah.
Sounds
Wow. Wow. Paul, you're a broker, aren't you? What do you think of that?
I don't do a lot of broking myself anymore, but I think that's somewhat unique to Richard's company, though. And what I mean by that is, and I don't think it's fair to say zero, because they wouldn't know about your company if they didn't send you the deal. So that's the value in that transaction, I suppose.
Very good point.
It depends what finance we're talking about, though. You know, like with buy-to-let, for example, more than half of the 1,500 odd products available are only available through brokers. Yeah. So if you try to do it yourself, you literally cut off to half the market and there's no other option to do that. Yeah. You also have to go down and speak to your local bank manager who, bank managers aren't what they used to be. They probably don't know half of what even their own products in a lot of cases. So, I think in some cases a good broker can add an awful lot of value, but it all depends on what we're talking about.
I would like to qualify that. I'm talking about brokers that are dealing with development finance, not buy-to-let mortgages. Mortgages are different. It's a regulated industry. It has to be done. You need a certain qualification in order to offer a mortgage. But for borrowing, senior lending or raising equity, you don't need any qualification to introduce a borrower to a lender. And anybody can set up a brokerage. And I think that their role should be to advise a developer what they're looking for and what they need to deliver the project, and they don't tend to do that. They tend to just forward the information to the lenders and say, do you want to do this or do you not want to do it? And it means the borrower is not getting the best choice, not getting the best advice, or not getting any advice, and that's not good.
What's the broker getting out of the deal?
1%, typically.
1%. So if you're looking looking at £1 million deal, it's 10,000?
£10,000.
In some cases.
But what, for forwarding an email?
For forwarding an email.
In some cases, more than that. It can be more than that.
It can be £30,000, £35,000 on typical developments that we might be looking at.
So what's the answer then? What should people be doing?
Become commercial brokers, by the sound of it.
We're missing a trick.
We're all sitting here thinking, well, that sounds quite good. I know I've got a few contacts. I think I could do that. But I mean, it's different for Paul because Paul's a fully qualified mortgage, broker, which is very different. It's very tough to become qualified in that game. Yeah. And we're talking about non-qualified people who are purely commercial. And now I'm doing these joint ventures. And people come to me with deals and want them funded. And a lot of them do come via brokers. And I have to tend to agree with you, Richard, that a lot of the ones, and it's not always the case, I know, but a lot who come to us really, I'd rather than they come organically to me and then we help them, and we might well recommend a broker to help them, but to start with, rather than through the broker. But in the old days, things have changed so much, haven't they, Rich, from when you and I started? I mean, and Tony, of course, in as much that you had a bank manager And if you knew other banks, and you'd go and speak to the banks direct.
Yeah, because that's where the money came from.
And that's where the money comes, and that's where it still comes from. But these days, there's all these new banks which have set up, and it's great in many ways for the industry, but they are expensive.
Yeah. And everything's centralised now.
And
the bank manager has zero power.
Zero power.
He can't say yes or no to
I
anything.
don't even know who my bank. I have a personal bank manager. Goodness knows who he is. You know, so the whole thing's a complete farce anyway. But it has changed completely, and I think to expect a first-time developer or investor looking to buy to let or whatever not to go through a broker, it is probably naive to think they won't.
It seems a good place to start, maybe, if you're kind of like, well, where do I get the money from? I've seen the opportunity, I need the money.
Yeah. And they will go for a broker, and they have to go for a broker, I think, in order to know who to talk to. But it's important that they know what to expect from the broker, so that they're pushing the broker to deliver the service that they should be getting.
And that's the key point. We've talked in earlier programs about instructing someone.
Yeah.
Well, you've got to know how to deal with that broker. You've got to understand what information is critical for that broker to be able to successfully understand A, what you want to achieve, B, what is possible, and C, that when the broker does pass it on to senior debt, crowdfunding, bank, whoever, all the bank or whoever is going to do is look at it and say, fine, I've got 99.9% of the information I need. It either goes or it doesn't. Whereas a lot of approaches I get, and I'm no longer in that game, you find you're the third, fourth, fifth or sixth person that they've potentially put the deal to. That you can put hours and hours and hours, and the whole thing falls over at the last moment through no fault of your own, because A, they hadn't told the broker
The truth.
a key fact or the truth.
Yeah.
Where the bodies are buried.
Yeah, where the bodies are buried, etc. Yeah, or somebody's got there before you, or the survey report came back
They're
bad.
dealing with 5 different brokers.
I think a good broker, Tony, what you're saying there, a good broker knows their client, but more importantly, and especially when we're talking commercial lending and dev finance bridge loans, they know the lender and they know where it might fall down with the lender. Too many brokers just fill in the form and submit it to the lender that they think has got the best rate. Well, they've given the client goes, oh, best rate. Well, you won't get a loan with them because of your track record or because of your accounts or whatever the reason. Knowing the lender to micro detail, not just whacking off a form, is critical.
I think also it's a little bit like the estate agent, isn't it? A good estate agent will progress the sale right through to the end. Any problems, they'll try and sort it out for you. And actually, you are paying for the ones with a commission of estate agent. You are paying for the ones who for the sales that fall through almost as much as you are the ones that don't.
When it comes to looking for a deal, if you're not experienced, I suppose there can be an inclination to look at the top line figure, 9% or whatever it might be. Is that what you should be doing, or should you be digging deeper?
Well, you've got to look at the true cost, obviously.
Yeah,
because there's some products have low rates and really high fees. So you might be paying 5% rate, but if there's a 4% arrangement fee, well, that
exit fees as well.
and then exit fees as well, and
that arrangement fee is the broker's fee mainly.
includes the broker's fee.
Includes the broker's fee. So you're paying. You may not be paying up front for the broker's service, but you're paying it at the end. It's hidden in there. Yeah. Because the bank aren't paying it, that's for sure.
Paul's point about the total cost is such a key one. We had one recently where there were 3 offers of lending, all about the same rates, all about 8.5% per year, but the difference in total cost was about £120,000. And it was only an 18-month project. And it's things like the fees, but it's also things like, do they charge on the gross loan from day one, or do they charge on money that's been drawn down? That makes a huge difference in terms of the interest. What do they charge if you go over the term by a month or two? And the broker's job, I think, is to look at the total cost in different scenarios. So when it goes to plan, or if it doesn't go to plan, what is the cost going to be to you?
And in your experience, are they doing that?
In my experience, most of them aren't doing that. There are some very good ones, but in my experience, most of the ones that we deal with are not doing that.
Sorry.
Sorry, I think that especially applies to development finance because a lot of brokers in development finance, they're kind of throwing the proverbial at the wall and seeing what sticks.
And a lot of them aren't qualified either. Paul.
They're not qualified. Similar to estate agents, you know, a concreter can become a estate agent tomorrow, and nothing against concreters, but they probably don't know an awful lot about property, selling property, and that sort of thing. Yeah. It's the same with brokers. You can literally set up tomorrow with no qualifications, and therefore there's a huge difference between a good one and a bad one.
Yeah. So like everything that we talk about in these programs, actually it always comes back to getting advice from people who've been there already, researching it properly, not looking under B for broker and grabbing the first person kind of thing.
Yeah. A good broker should be looking after their client, and this is what's so frustrating. They should be looking after their client, like a solicitor should be.
And that's another thing on fees, is a lot of people don't want to pay a brokerage fee.
No.
But actually, in a lot of cases, you're better off paying a brokerage fee because then the broker can act on your best interests rather than just chasing commissions. And that's not always the case either,
Typically, the lender will charge the broker fee and then pay the broker. So it's normally down to the lender to pay the broker, not the developer. So if you were my broker, I wouldn't pay you. You would get paid by Nick when he lends me the money.
Thanks very much. Yeah.
I think it depends on the products we're talking about again. But some brokers will charge a fee to put in an application, for example.
Which I don't mind that, because actually you think, well, they are doing a job, but then if they're getting a massive fee off the bank, which is all via you anyway, then it is a bit soul destroying.
It's a bit like property sourcing. The PRS scheme and these other schemes have come in to stop property sources charging both sides of the deal and being conflicted. Yeah. Actually, that really needs to be looked at maybe in more detail with brokers charging the client and getting their fee for the
without question.
It's not really that ethical.
So once you've done your finance deal, you've got it all sorted, do you then kind of sit back and go, great, I've got through that hurdle, let's develop the development or do whatever it is you're using the money for, and until you get to the end of the term, or have you got to keep your eyes peeled on it?
Well, what I would say is, and what we're finding when we're putting the deposits in for these developers who haven't got the deposit, if you like, we're putting in the junior debt on deals, is that the terms you get first from some of these so-called property banks are not what you end up with at the end. By the time they've done their due diligence and everything else, we've got one at the moment where we were investing £450,000 into this project. We've ended up having to put in £845,000 because the bank have changed their terms along the way. So the client's been sucked in, if you like, and then in the end...
Yeah, to be fair, John, to the banks, I don't like saying that, but to be fair to the banks, the reason they're doing that is that when they make their offer, it's based on certain assumptions, and once those assumptions are proved to be wrong, so for example, a key one is what is the gross value, and once they get the valuation...
I won't go into details of this particular project, but because it would be unfair and unprofessional. However, what I would say, it was valued at the right money.
Okay.
So, but I'm just saying, just because you got an offer, it doesn't mean that at the end, that's going to be the case.
To answer your question, I think, does the broker just get the deal and then walk out? I think in development finance, the answer to that's no. A good broker will stay involved throughout the deal, stay involved in the drawdown process. So if you're taking development finance, every month there's a drawdown. Good broker will get involved in that and massage the relationship between the bank, yourselves, and the fund monitor, who's usually a surveying firm that's put in place by the bank to monitor the build, check it's getting built and the money's going somewhere. And then they keep that whole dynamic together. It's really important.
And also deal with issues that come up. Once you've got the agreement in principle, getting it through is, it's like all these house tricky, deals. Any sale, it's okay having a buyer, but getting it, that's 30% of the job. Getting it through to the end is the other 70%.
Yeah,
how aware should you be right at the beginning when you're getting your finance deal of the fact that it may not be done by the time you expected? I mean, and what impact can that have? Because that does happen, doesn't it?
Really good question, isn't it?
At the moment, that's very common. Most developments are 6 months, maybe a year behind because of COVID. And so they've gone past the end of their term. And it's something you have to manage proactively. If you're running the project properly and you're managing your cash flow and you're projecting your cash flow, you'll know you're not going to be able to repay in time. And so you should have that conversation through your broker, ideally, but before you get to the end of the term. And you might want to look to refinance, you might want to look to extend, but you should explore the options and the cost of those options at that point, rather than waiting to get the redemption statement and realising that you can't pay.
So you've just touched on an important point, sorry John. The broker relationship, if they've done 100 transactions with that bank, they've got a better relationship than you coming in direct for your first deal. Yeah. So that's where they can add real value, is that relationship to stop the bank going in like vultures. And
Yeah, one thing I would say is that we bought a site last year in Birmingham off the receiver because the bank have gone bankrupt. The bank have gone bankrupt. Now, 20 years ago, Richard and me and Tony would have thought, a bank going bankrupt, that's impossible. Yeah. But these days, there are a lot of these small banks about, and if they're offering you fantastic terms, better than anyone else's, just check why. And whoever the bank is, do research on them. Look at their last set of accounts. See whether you're comfortable to actually borrow from them, because it may well be that they're in a more precarious financial position than you are. Just because they're called a bank doesn't mean they've got the money. Exactly, because if they go bust, that means basically your site goes bust, because they will then claw, whoever the receiver is will claw the money back to pay whoever's through. By forcing you to sell, refinance if you can, and if not, they'll take it off you.
With refinancing, do you tend to go back to the same source of the finance in the first place, or like with a house when you might remortgage and go to a completely different lender? Do you do that, or is it just too much aggro when it comes to a development?
Look, you can do either or. I think a good point that Richard made before was understanding what happens at the end and knowing that you're more than likely to need longer than what you initially thought. Yeah. Because some lenders can be really aggressive when it gets to the end, and they can really, bridging lenders and that sort of thing, that they can really come down on you really hard, and that's where some of them make their money, is when they've got you under their boot. So you need to be aware of that. But hopefully you will have an option of perhaps going with a different lender, or finding a way out.
I think also with bridges, what you've got to remember, the total amount they lend will then be reduced by the interest that you're paying. So I'm right in saying, aren't I, Richard?
Your net loan is a lot less.
The net loan they'll give you is less than what they're offering you, because they take the interest for the first 12 months first.
Yeah, so the net loan will be the same, but the gross loan, which is the amount that you owe them from the very beginning, will include the interest that they've allowed for during that period.
Yeah, but they what I'm saying is, if the interest is 12,000 for the first 12 months, they will take off that what they give you from day one, and people get caught out by that. They'll be 12,000 short because they thought they were lending the full amount and pay the interest on a monthly basis, but they don't. The bank want the whole of the 12 months interest first. So the net amount they give you is less.
Do you ever get a situation where you get to the end of your term and you struggle because of a change in the markets or whatever? You struggle to get the finance you need to carry on. Is that when it all falls apart? I mean, tell me how it...
It can do, yeah. There's the broad range of lenders out there, and generally the more flexible, the more expensive. So quite often when people get themselves in trouble like that, they have to go with a more flexible, more expensive lender. Which will help them get out of that difficult situation, but is obviously going to cost them quite a lot of money to do it.
I think the other thing is it takes time for a lender to decide whether or not to lend. So if you're with lender A and you're getting to the end of the term and there's only a month left, you might find lender B who will lend to you less now because a lot of the risk has been taken out, but they don't have the time to go through due diligence and do their credit checking and so on, so you don't have that option. So the sooner you start to look at it, the more options you have.
So if you've got to the month to go point and you haven't got the time, what do you do?
Well, you shouldn't get to that point.
Yeah. No, but if you do, there are bridge lenders out there that will charge you a fortune.
But having listened to this show, you have no excuse. Would you say 3 months, Richard, before the deadline? At least 3 months. Maybe 4?
Yeah. You should know every month where you're tracking in terms of your original cash flow. And as soon as you get behind, then start talking to your lender. The sooner you start talking...
Anticipate the problems before they happen.
Is there, this is a very inexperienced question from someone inexperienced, but is there a certain percentage of return that you should be targeting and expecting, which will enable you to ride whatever waves have happened over the period of the development, that you should be looking at?
In terms of the profit levels on the whole development?
Yeah, profit levels on the whole development.
I think a big scale developer expects at least 20 to maybe 25% profit.
Yeah, I would say the big house builders work on a lot less.
Yeah,
because there's like a sausage factory. They just churn out these houses. They know exactly to the penny what they're going to spend when they build them. For me, I always strive to make a net profit on costs of 30% after all costs, 30%. And if I can't do that, I don't do it.
But that's interesting. So 30%, so let's say it's a 2-year project. And let's assume, for argument's sake, you're borrowing all the money because it's easier that way, and you're paying 10% a year.
Thank you very much, Richard.
You're welcome.
Can I borrow all the money?
Yes, you can.
Thank
on
you.
a JV, yes,
Thank
you can. But if you're paying 10% a year and your project is delayed by a year, then that 10% is a third of your profit gone already. If your costs are higher than you expected, that's an extra 10% gone already. And if you can't sell, so you're discounting to sell, and before you know it, you have no profit at all.
I agree.
That finance can eat your profit before
big
you...
time.
In a blink.
Big time. But you know what? And I have so many people send me deals which have got 10, 15, 20% in them. At that level, you're definitely underwater. At my level, if it all goes wrong, you may get your money back. Yeah. That's the difference.
So because, well, sorry, Tony.
So I was going to say, we're talking, mainly about larger scale. But what about people who are relatively new to development? Mm-hmm. What kind of returns?
I still expect them to make 30%.
You still expect them to make 30%?
I do.
Okay.
Yeah.
All right.
Yeah, I think it depends on how much is involved. If it's just a small renovation type project, then perhaps a little bit less. But in saying that, some small renovation type projects can make a lot more as well. So it's like what Richard said. It's all about accounting for these contingencies, and if you've done that sort of those checks and realise, well, actually this might end up making nothing, then it's not worth doing.
No, but also time. I think you'll agree with this, Nicholas. If a deal's going to take 3 years or a deal's going to take 1, if you know it's going to take 1 because it just needs a lick of paint and to put back on the market, then you can be much softer on that than you can on something that's going to take 2. If it's 3 years, you may want to make 40% net profit. Really, so it does. You have to. All these things are an average. You have to use your own emotional and business intelligence to say, well, I know the guys and girls say that, but what is the time risk? How long is it going to be in for? And that's also very important.
Also, most lenders don't want to put you in default. Most specialist lenders anyway, they're borrowing money from other people, and they get lent that money on the basis of their track record. Yeah. And the rate, what they pay for that money, is dictated by their track record. So their track record is important to them. So the last thing they want to do is put you in default. So the sooner you talk to them, the more likely they are to find a solution to the problem, because it's not in anybody's interest.
No, that's very good advice.
I think that's broad advice. I think there are lenders out there that are far more ruthless.
There are some.
There are some. How you operate, but there's a variety of lenders that have different risk profiles and they want their.
But again, these days you can check them out.
Exactly. Yeah.
It's all about do your research. Find out who's decent. Always stick with. I've got 4. Well, all friends, I like to think we're friends most of the time now, who I trust implicitly because we're professional people. And, there's a saying, there's a racehorse saying in racing, and that is, put your horse in the worst company and yourself in the best. And actually, that's not a bad saying for property as well.
Just quickly looking at the impact of COVID, and, there were long periods of time where people weren't going to work, things were all delayed. Have we seen the fallout, the end of the fallout of that when it comes to, people might still have their finance in place, but actually it's coming to the end and they're still a long way off the finish?
Finance slowed down substantially when we were at the start of the whole COVID situation. We were all in lockdown. It was much, much more difficult to get. But in my experience, it bounced back super quick. And it's probably almost better now than it was then.
Almost more efficient than they were, really, because whether it's because they're working from home or not.
Yeah, but I think from
maybe they need to be.
Richard says no to me really quickly now. Yeah.
Just be so polite.
But your point was, are we going to face the problem of COVID, the problems caused by COVID now?
Maybe people who are developers who are in the middle of a deal and it's all been delayed and the end of the term is coming, and have we not actually seen the full implications
Well, we're
yet?
seeing it now. So most days I'll talk to a developer who's experiencing a delay they should have been paying back about now over the next 3 to 6 months, and we're talking now about what we do about it. So it's coming out of the woodwork now, I would say.
Okay, well, plenty of advice there, as always, from you all, this time about how to finance your deal and the best way to go about it. Thank you all very much.
Pleasure.
Fun.
I'm sure you've got some excellent tips to take away. We'll see you next time on Property Summits.